If you can't clean and analyze a data set properly, you'll get exposed in front of your director and you'll be stuck at your desk until midnight fixing it. But when you know how to structure data correctly the first time, you build credibility fast and actually leave the office at a normal hour. The biggest mistake people make is jumping straight into the numbers without even understanding what they're even looking for. I used to really struggle with analyzing data because I was just overwhelmed. I didn't understand the business context and I was afraid to ask for help. So I would just dive in and start analyzing without really even understanding what I was even looking at. Once I would send it in for review, I'd get comments back saying that the analysis was wrong and that I would need to redo it because the numbers weren't tying back and they weren't consistent with what the client told us that they should be. So I would sit at the office from 6 p.m. until midnight, just spinning my wheels, only to send it out late for it to be wrong again so that someone could just walk me through it the next day. And the most frustrating part was that most of the time that I was spending wasn't actually fixing the analysis. It was just trying to reverse engineer whatever the senior person wanted in the first place. So I was just solving the wrong problem over and over again. But here's what changed everything. Before you even touch a single cell, write down the specific business question that you're analyzing. Not just analyze the financials, but something concrete like which SKUs are the most profitable for the company. And when you know exactly what you're looking for, you're gonna start doing the right work from the beginning, and then you'll look like someone who actually thinks like an investor. All right, so you know what question you're answering. Now you need to prepare your data. And data is never going to be perfect. They say that data is only as good as the inputs it gets. Garbage in, garbage out. Some companies are just better at inputting good data than others, so you're really going to get a range of quality when it comes to data. You need to do the best that you can with the data that you have, which just a lot of times means that you're going to need to think outside of the box. Here's what I mean. You're going to get spreadsheets where dates aren't formatted in a way that immediately makes sense. You don't have the exact financial metrics that you're looking for. If I'm looking across here, I don't have what profitability is by SKU, which is stock keeping unit. If you try to analyze this mess as it is, then your formulas are gonna break and your totals aren't going to tie, and you're just going to spend hours troubleshooting something that you could have fixed with 10 minutes up front. So here's what your cleaning checklist is for you to do every time. You need to format the data how you want to see it, create whatever side calculations that you need for the metrics that you want to see, and make sure that every column just has a clear header. You do this once correctly, and then everything afterwards becomes 10 times easier. And clean data is the difference between leaving at 6 p.m. and leaving at midnight. I'm gonna do a little bit of data cleanup work over here. So I'm gonna format all of the rows width so that I can actually read and see what it is that I'm looking at. And I want to clean up the top so that it is obvious that it is a header. This date format doesn't really make sense, and I don't have what profitability looks like. Profitability would be the difference between revenue and COGS. So the first thing that I want to do is format the date into years so that I'll be able to run some analysis. So for year, I'm going to say equals year and pull the information from the data set, 2025. I'm going to format this as a number so that my lookups will make sense. There's no column separator. And then I'm gonna drag that down. The other thing that I wanna calculate is what is the profitability by SKU. So revenue minus COGS will be gross profit. Move that here. And I'm just gonna calculate revenue minus COGS. Drag that down. make this a different color so that I can remind myself that these were the calculations that I put into the analysis. And then I'm just going to format all of these numbers so that they look how I want them to look, with commas and no decimal places. All right, your data's clean, but it's still just a giant table of numbers that don't reveal anything on its own. A lot of times, clients don't know what the trends are because they've never studied the data like this before. And part of the job, whether it's investment banking, private equity, or another investing role, is to analyze the data in a way that the owner of the business may never have. In a lot of ways, you'll actually know the business better than the seller from a finance perspective. Never from an ops perspective, but definitely from finance. And part of the skill is to arrange the raw data set that's overwhelming for most people into a format that actually makes sense for anybody to read. Because here's what happens if you don't. You'll send over a spreadsheet with 50,000 rows of transaction level data and expect someone else to draw conclusions from it, but they won't. They'll just ask you what it means, and if you can't tell them, then you just wasted everyone's time. So here's how you should structure it. First off, you want to segment it by time. You want to break the data into the years that you want to see so that you can spot trends, and then segment it by category. In this instance, we're going to do it by SKU, but it can be by region or channel with this data, so you can see where the growth actually comes from. You want to set up tables with a specific question in mind, not just hoping that something interesting pops out. And create clean summary tables on a separate analysis tab. Never do work in the same sheet as your raw data. You want to do that completely separate. All right, so I am going to set up a separate analysis and start to line up the tables so that we can see what the ultimate analysis is going to look like. And what we're looking to see is gross profitability by SKU. We have this huge spreadsheet here that we want to summarize down of 900 rows that we want to summarize down by SKU. So I'm going to create a new summary sheet. Summary. And what I'm going to do is I'm going to copy over every single SKU in the 900 rows. And then I'm going to delete all of the duplicates. So to delete duplicates, it is Alt-AM, click OK. And it looks like there are 8 SKUs in this analysis. So of the 8 SKUs, what we want to do is see what the profitability looks like by SKU. And in the raw data, what we already did was calculate what the gross profit or profitability is. It would be revenue minus cost of goods sold. And we want to see how that trended by year. So if I check the data set, the years in here are 2023 through 2025. And so I'm going to label 2023, 2024, 2025. And I'm going to call this gross profit. And I'm going to format here. And it's important to format it clean so that anybody who's looking at the analysis can understand exactly what it is that you're trying to accomplish. Put a total at the bottom, and then an underline. When you structure data this way, the trends become obvious and you look like someone who knows what they're doing. Now we're getting into the real tools that'll save you the most time. Working in finance, Excel is a tool for you the same way that a paintbrush or a chisel was for Picasso. You need to know how to use the tools to get the result that you want. Excel is so powerful, but if you don't know when to use each function correctly, then you're going to spend hours doing it manually. I've seen people literally copy and paste values one by one because they didn't know there was a formula that could do it automatically. I've watched analysts manually sum up rows for hours when a single sum ifs formula would have done it in 2 seconds. And look, no one's gonna teach you this stuff. You're just expected to know it. So if you don't, then you're burning hours every single night on work that should literally take you 10 minutes. So here are a few formulas that you need to master. First is XLOOKUP, where you match data between tables. You use it when you want to use this to pull a particular descriptive information for a unique identifier, which in this instance is going to be SKUs. So if in this analysis, I wanted to see for each SKU, what is the product name, then I would do equals X lookup. I would say, I want to look up this SKU value. And if I look up that SKU value within all of column B on this table, I want it to look within all of column B and then return what the product name is associated once you find what that SKU number is. And so when you drag this down, you'll see that each SKU corresponds with the product name, and this is what the product name is. If you want it to be the category, region, or channel, just pull those all over. You would do an X lookup, look up the value, have it search within the whole column, and the dollar signs hold it, so it tells Excel holds that column when you're doing the lookup, and then pull what is in the column that you are asking for it to return the value for. And when you drag that across, what you end up getting is all of the descriptive information based on the unique identifier, which is the SKU. Now, SUMIFS is when you add numbers based on multiple criteria. So in this instance, I want to find total gross profit for a particular SKU in 2023, 2024, and 2025. So you would use SUMIFS. So if I'm doing a SUMIFS formula, I'm going to say equals SUMIFS, and I'm going to say which column do I want to sum? And I want to sum the gross profit. So once I check to see based on these criteria, I want it to return what the gross profit number that I calculated was. So the first criteria is if the SKU is the SKU that we have in this row, and if the year is the year that we want to pull. So this says if it is SKU H700 and the year is 2023, then I want you to sum every value in that table and return me the total. So when I do that, I get a number that I'm gonna format really quick. And if I drag that across, I should get that for all of the SKUs and drag that to the bottom. Which I can then sum a total to see what the total gross profit is across the business by year. Now, you don't need to know every single Excel function. If you know these two really well, then an analysis that'll take someone else 2 days, you'll be able to finish in 2 hours, no problem. Now, your analysis looks great, but if your numbers don't tie back to the source, then none of it matters. The easiest way to know that your analysis is wrong is if someone checks your totals back to the source data and they don't tie back. It undermines all of the analysis's credibility, and directors more senior than you will feel like they need to check your work. Here's what happens when you don't. You send your model to the VP, they pull one number, literally just one, and trace it back to the source data. Once they check it, it doesn't match. Maybe you accidentally filtered out a row. Maybe your SUMIFS formula had the wrong date range, but it doesn't matter because now everything that you've done is suspect. The worst part is that they are not going to tell you immediately. They're going to check a few more numbers, probably find some more issues, and then at 7 p.m., right when you thought that you were done for the day, you'll get a message that says, hey, we need to go through this, can you stay? Now you are stuck redoing hours of work, and every time that you send something from now on, they're going to check it twice. I can't emphasize enough, That's the cost of skipping quality control. When your seniors don't trust you, they will be on top of you. And that reputational damage could spill out and keep you from getting promoted in the future. Attention to detail is a core competency for people working in finance. So you want to always make sure that you're checking your work before someone else has to for you. Here's how you bulletproof your analysis. You want to add a reconciliation row at the bottom of every summary table where you sum your analysis minus the sum of the source data, and that should equal 0. And always sense check your outputs. If something here shows that you have a 95% gross margin, then you either found the most profitable product of all time or you need to find the error. These checks literally take 10 minutes, but save you hours of rework and protect your credibility. So I add a column that says check. I'll group it. And honestly, I'll make it red so that people know it's not part of the analysis. And I will do a sum if just for the year. So I'm gonna say sum if the year is 2023, then give me what the gross profit is. And then I'm gonna make that a number so it's the same format. And then I will drag that across, and then below I will have a check column and drag that across. So you have, I see a 0 here and then some errors. So the question is, what went wrong? I probably didn't drag the formula over correctly, and I didn't. If I see F2, it says that I held the 2023. Sometimes you need to do some troubleshooting into what your calculation is, but that's why I do it. And then you drag it over, and that's how you know and can confirm that the calculation that you did was correct. Your analysis is solid, so now you need to communicate what it actually means. Too many times, investors have an idea of what they want their story to be, so they'll look for ways to manipulate data or statistics to fit their story. Over the long term, that's going to degrade decision-making and lead to terrible investments. Think about WeWork. Investors wanted to believe that it was a tech company, so they focused on metrics like community adjusted EBITDA, which was basically just a made up number to make their losses look smaller. They ignored the fact that the core business was just renting office space at a loss. The data was telling a clear story, but people just didn't want to hear it. Or look at Theranos. The data kept showing that the blood testing technology just didn't work, but leadership kept spinning the narrative that they were on the verge of some crazy breakthrough. They literally manipulated the story instead of listening to what the data was actually saying. Investing is all about capital allocation, so you need to maximize truth seeking in order to make the best decisions long term. Your job isn't to make the data say what you want, it's to figure out what it's actually saying and then communicate that clearly. Look for real trends and not just the ones that you hope to find. Being great at Excel gets your work approved, but it doesn't get you promoted. There's one skill though that separates associates who stay stuck from associates who move up fast, and I break down exactly how to develop it in this video. Thank you for watching and see you next time.